Hi everyone, Dion Zakuski, Branch Manager, Portfolio Manager, and Senior Wealth Advisor back with you. The sun is now out, we want to be outside, but hey, we still gotta know what's going on in the investment world out there. So today, we know that we're about halfway through 2026, and if I had to sum up the market so far, I'd say better than expected, but to use a golf analogy, not exactly a stress-free round out there. So in the next few minutes, we're going to look at where we've come so far this year, what we see happening next, and then looking at strategy. In other words, what we should be doing about it. After that, we're going to bring our associate Rachel in, and she's going to talk about summer travel plans and fun stuff. So, the story so far. Markets came into the year with some doubt, but have quietly delivered. Even after a dip in March due to some geopolitical issues, stocks have rebounded, earnings have held up well, and inflation is still pretty much under control. Corporate earnings have been an especially great story and have been very, very resilient, and I'll show you some information here. When we look at the following chart, we can see that the red line, being earnings per share, on average since the beginning of the year, has had a steady climb higher, very positive. The price change of the overall market, being the US market, was treading water, and then of course in March and April dipped lower, but now is significantly higher and back in the black for the year-to-date number. And when it comes to the economy, our Scotia strategists have been clear. In Canada, things haven't been super, but we're not seeing a major downturn either. It's more like playing through a windy back nine. It's manageable, but you've got to stay focused out there. Back to the markets, earlier this year we noticed a lot of gains came from a small group of companies, mainly those in artificial intelligence and big tech. Think of it as like having one golfer in your foursome that's carrying the whole team in a tournament. Recently, we're seeing more parts of the market start to contribute, banks being one example, which is very, very healthy. The bottom line out there, the round has gone better than most people expected since we first teed off. Okay, looking ahead, we see three key themes as far as what's next. The first being interest rates. They were expected to go lower, but US economic news has been better than expected. Inflation has actually moved up a little bit. Now, this makes it very hard to cut interest rates and give markets and the economy that boost if it's not really needed. Here in Canada, it's purely a waiting game as our Bank of Canada recently kept interest rates on hold. Second thing we're looking at is growth. It's still out there, but is slowing down. We can look at some more details here. The following chart shows GDP growth forecasts from the beginning of the year. We can see that the blue line, being the US, has significantly outpaced economies around the world. Most other major economies, including Canada's, has trended lower, but is still on the positive side of the ledger and have stabilized for now. So this brings us to our third theme, which is the broader markets. And the next leg higher probably isn't just about a few stars lifting portfolios. If the first half was about one golfer in your group going low, the second half will be about the whole group needing to play well. And this is where diversification starts to matter again. The simple way to think about it, the game is widening out, which will create some opportunities. Okay, so what are we doing about it? What about the strategy out there? At the Zakuski Group, guided by Scotia's research, our approach is steady. First, we want to stay invested. Trying to jump in and out of the markets is very tricky to do, if not quite risky. It's kind of like trying to fix your golf swing in the middle of a round. You usually make it worse. Second, we're going to continue to focus on quality, so having strong companies, consistent earnings, and we want to have those guys that are going to hit it in the middle of the fairway for us. The third is we're always going to look to rebalance, so if we've had strong performance, we're going to trim some profits. Where opportunity is building, we'll look to add to positions. It's like course management. You're not going to swing as hard as you can every time, right? You got to play the hole smart. And most importantly, we want to keep emotions out of the decision making. Because in investing, just like golf, the biggest mistakes aren't usually technical, they're sometimes mental. So as we head into the second half of 2026, we know there will be noise, we know there will be volatility. There's the Middle East, there's US midterm elections coming up, there's always something making you wish you maybe want to have a mulligan out there. But the big picture is still strong, still positive, still intact. And this is the exact kind of market that does reward discipline, diversification, and that steady hand. If you want us to talk through your plan, call us anytime. And now we'll bring in Rachel, who'll talk about wealth planning and summer travel.
Summer is here, and with it comes the reminder that life is not just about preparing for the future. It is also about making room for the experiences that make the future meaningful. Did you know that when we build a wealth plan, we do not only look at retirement income, taxes, investments, and estate planning, we also take the time to understand what you want retirement to feel like, including travel, hobbies, family time, and lifestyle goals that matter most to you. For many clients, travel is one of the biggest retirement goals. Maybe that means an annual winter getaway, visiting family across the country, exploring other destinations, or taking a few large trips along the way. Those expenses can be built directly into your retirement plan and projected out over the 25 to 30 years you would spend in retirement. This helps us show you how your retirement lifestyle can be supported over time, how inflation may impact future travel costs, how your investments and income sources can work together to fund the life you're looking forward to, not just the bills you expect to pay. Around our office, summer goals look a little different for everyone. Dion is looking forward to spending some time on the course. Juan will be out exploring the mountains on his bike. I'll be enjoying some camping at the lake. Jessica will be relaxing on her back deck, catching some rays. And Catherine will be spending more time sunbathing on her boat. Whatever your ideal summer or ideal retirement looks like, the key is to plan for it with intention. A thoughtful wealth plan helps turn today's goals into tomorrow's possibilities. If travel lifestyle goals or retirement spending are on your mind this summer, please get in touch. We would be happy to build that conversation into your wealth plan. And thank you for watching today.